Hello and welcome. My name is Gino Barbaro, one of the co-founders of Jake and Gino. And on today's show, we have Dan Lewkowicz. He's a seasoned real estate veteran with over 15 years of experience. Starting his career house hacking, he quickly moved on to flip houses, eventually creating a company called Renaissance Real Estate Ventures. Currently, Dan is the director of investment sales at Encore Real Estate Investment Services, specializing in shopping centers, medical office buildings, and industrial fulfillment centers. Welcome to the show, Dan.
Yeah, thank you so much, Gino. Appreciate having me on.
And one thing I failed to mention in that bio, Dan's got 5 kids. So I'm beating Dan. You know what? One more, I'm ahead of Dan. How you doing today, brother?
I'm doing great. Yeah, I appreciate you having me here. This is excellent and all is well.
Let me ask you, house hacking, how did you get into real estate and why?
Yeah, so really, I would say that the moment that I got into real estate, it actually wasn't in a typical real estate environment. I had helped to start a company in 2005 called Disability Made Easy, which is a barrier-free home modification company. Started it with some very close friends of mine whose father unfortunately had ALS or Lou Gehrig's disease. So we saw a niche and a need to have like a one-stop shop for barrier-free home modification for people with terminal illness or disability or injury. And I did all the sales and marketing, but there was some time that I spent with our project manager actually going out to sites. And I'll never forget one time we drove to a specific property. We got there, went through the house. This individual was wheelchair bound. I got out of the property with our project manager and I said to him, I was probably at the time 22 years old, roughly. I said, what are we doing here? Like, there's nothing that can be done. This house is so outdated. It's so functionally obsolete. It doesn't suit him. He should just pack his bags and move. The guy didn't say a word. He took out some graph paper and a pen. Or a pencil and started sketching. And within 90 seconds or so, he had a whole new front elevation and a whole new layout to this property. And it kind of just showed me that there was this, opportunity, in real estate to take something, to make some changes to it. And then the end product is worth more than the sum of what you started with and the changes. So that for me really got my gears turning. And when it came time for my family and I to buy our first home, we were very close to going under contract on a property that was 100% move-in ready. Keep in mind, this was in the middle of the recession. And I started thinking to myself, like, do I really want to spend this much money? I'm a young guy. I've got a couple kids getting started. And I had heard that there were some lenders that owned real estate a couple blocks away, reached out to the lenders, found almost the exact same house for a fraction of the price, bought that property, managed an entire renovation. And again, same thing. Wow, now I've got a property that's worth a lot more than what I put into it. So that really started off, the idea, when I was done with that property, I bought another one. And over the years, I probably flipped close to 100 properties at this point. And it just became a passion and something I was excited about and something that I had always done on the side until I went, full time into my own, flipping business.
When you got into the flipping business, now you're into the brokerage. Let's dive into, because a lot of the people listening are investors. I want to get in front of a Dan, someone who's a mover and shaker, someone who has a list. Give me some tips or walk me through what you're looking for in a prospective investor.
Yeah, great question. So I am, I would say, more open than most in terms of, making myself available. So for anybody who's watching this,
I got to cut you off right there. You know why that's true, everybody? Because Dan's on the podcast. How many realtors and brokers get on multifamily podcasts? Very few, because life has been good. They've been on vacation. They get listings, they throw them up, and bam, it gets sold in a week while the market is shifting back to a buyer's market. So brokers need to get back on. I didn't mean to cut you off, Dan, but that's such an important point. If you're a broker and listening to this, start writing a blog, start a YouTube channel, start getting onto podcasts, because you're going to need to create your brand, because it's going to become winter. As they say in the Game of Thrones, winter is coming, my friend. So didn't mean to cut you off, but that's such an important point, my friend.
Yeah, it's so well said. And I've been on podcasts and active in social media and putting out content for about 5 years now. And I would say that's the differentiator between me and a lot of brokers, is that I put myself out there. Now I'm exposed to Gino's audience, and there's going to be people from Gino's audience who are going to reach out to me who can use my services and vice versa. So it's really a win-win. So back to what you were saying, I do make myself very available. So if somebody's watching this and they want to learn anything about commercial real estate, if they have property, they want it evaluated, they want to sell it, they want to know what it's worth, or they just want to talk shop within the real estate world, please reach out to me. I'll share my contact information at the end. But really the answer is like, it's very simple. You just have to do what you say you're going to do. So if you reach out to me and say, Dan, I'm a buyer and I'm looking for A, B, C, D, E, F, and G, right? And I've got those check boxes. And if I start putting property in front of you that checks off every one of those boxes, right? As a broker whose, time is my only asset, right? I'm going to want to make sure that if the property checks off those boxes, we're moving forward in some capacity, unless there's some extenuating circumstances. Now, on the other side of things, if you're looking to evaluate property, but you're not ready to buy, that's totally fine. Reach out to me, but just be forthcoming and transparent, letting me know that you're not at that stage. Now, the second level to that, Gino, is if we've closed together, like for example, a lot of the properties I list, I double end them, meaning I represent the buyer as well as the seller, and I build relationships with my buyers, right? So those people have proven to me that they are legitimate buyers who will perform. So the next time I have a seller of a property, I say, hey, listen, we can put this on the market, or I can show it to some of my, exclusive buyers that I know they perform because they've bought from me before. And very often these sellers want to put these deals in front of these buyers because they want simple, easy, fast, quick, no headache, right? So that they can live their life and do what they do. So the second tier of this is to perform as a buyer so that you can receive more deals. I mean, I really typically only send deals to buyers that I've closed with before because I want to make sure that we're respecting each other's time. But those would be the two steps in terms of getting in front of a broker and being the one that's going to be privy to those, top deals.
I need to recap this for everybody because Dan's a fast talker. I think he's from New York like I am. And you know what? There's a lot of information in what he said. Truly, I mean, there's a lot of wisdom. Let's break it down to tier one. Tier one is reach out to Dan. But don't reach out to say, Dan, I want a cup of coffee, my friend. I want to meet you. You are looking good today. Your hair is looking fresh. You're really dressed up. You're looking great. Dan doesn't want to waste his time or your time. Come with a plan. Have what he calls, we say buy right, manage right, finance right, the buy right criteria. What are you looking to buy? Don't go in there and say, hey, Dan, I'm looking for deals. Well, what's a deal to you?
Right.
Understand the criteria. Also, do what you say what you do. If you've got a Zoom call at 10 o'clock with Dan or you're meeting him at Starbucks at 11 o'clock, be there. If Dan sends you a deal over and you're going to say to Dan, I'm underwriting this deal, I'll get it to you by the end of the day. Don't tell Dan that I've got a W-2 and I don't have time. I'll get it to you. Too much competition. Don't waste Dan's time. And be honest. If you just want to get on Dan's list and you're not ready to buy and you're transitioning over, just be honest and open. You just want to have the conversation. Now, tier two is, if you haven't proven to Dan, and I'll add a little caveat here, and you have brokers that you have done business with, maybe you get a referral from them and saying, hey, Dan, I've done business with these people. I'm ready to get on your list. I'm ready to make it happen. Make Dan understand that you are a closer because he said something very important. A lot of mom and pop investors out there, and even investors in general, these things don't hit the market because they don't want their investors to know. They don't want their employees to know. They don't want their residents to know. So a lot of the times they just want to get the transaction done. And Dan's putting his name on the line by saying, I've got Gino the buyer. Right. And all of a sudden, if Gino the buyer comes in with a lowball offer or can't close and makes Dan's life miserable and the seller's life miserable, Dan will never ever call Gino again. And that's what happens with a lot of beginning investors. I don't know if you want to add anything to that, but you really laid out the roadmap on how to work with the broker.
Yeah, I think well said. I would just add that, on the first tier, even if you don't know what you're ready to buy yet, that's okay. Reach out to me. I'll help you figure it out. I'll send you 10 deals so that you realize, no, I don't want a cell phone store. No, I don't want an automotive store. Oh, yes, I do want a medical office building, right? That's the way to know. I highly recommend underwriting as many deals as you can before buying your first deal. That's number one. And then number two, I think just to piggyback on what you said, Gino, is that, keep in mind from my perspective, like my clients are my lifeblood, right? Thankfully, I've developed incredible relationships, and many of these individuals are like friends or even family. But at the end of the day, they are entrusting me with their assets, and I have to ensure that I do what's in their best interest. So if you're a performer, yeah, that's in their best interest. But if I'm going to give you a deal to look at and maybe to be the only one to look at, and you don't perform, that's putting me in a precarious situation, and I don't want to do that to my clients.
The great Stephen Covey said, seek first to understand, then to be understood. And what Dan said also is truly enlightening. He's selling his time, and that's what every realtor, everyone in that industry is doing. So he's doing tasks that are important but not urgent. Everyone's putting out fires while Dan's trying to create relationships and trying to build that list. It doesn't prove fruitful today, but it will prove fruitful down the road. So please don't waste the broker's time understanding that that's their most important asset throughout the day, and they're trying to use it to build business down the road. If you'd like to add something to that, because I think that speaks to me as an entrepreneur, and it should speak to all the investors out there as well.
Yeah, absolutely. I think we all want to be respectful of each other's time and help each other to maximize our time. And that's really what a synergistic relationship does is both parties walk away with more than what they brought to the table. That's what we're looking for.
Let's dive into your specific niche of real estate and let's talk about net leases as well.
Sure. So, net lease is an interesting arena. When people ask me to describe what it is, I like to make a contrast to what it isn't. A lot of people are familiar with multifamily. So I think for the purposes of our discussion, we can compare net lease to multifamily. So let's take a look at a Wendy's property, okay? And as an aside, this Wendy's property is typically not owned by Wendy's corporate, right? It's not leased by Wendy's corporate even. It's typically owned by an investor, and then there is a franchisee who's operating the Wendy's out of that location. And that's one of the many reasons that not all Wendy's have the same cap rate and the same value to them, which we can talk about more later. So for the purposes of our conversation, we've got this Wendy's property that an individual owns, and the Wendy's franchisee is contractually obligated in the lease to pay a base rent of $125,000. So your gross collected rent in this case is $125,000. Let's go to the next side in the multifamily. Let's just make up an example. It's not going to be a perfect example, but it's a small multifamily building and only brings in $125,000 of gross collected rents. So if you add up all the rents, $125,000. If you look at the surface at the Wendy's and the multifamily building, they look very similar. They both bring in $125,000. However, in the multifamily example, you've got all kinds of examples, right? So you've got things like taxes, insurance, property management. There's going to be vacancy. There's going to be eviction costs. There's going to be, bookkeeping and office. There's going to be, shoveling the snow and salting the parking lot, repairing the parking lot, landscaping, roof repairs, window repairs, on and on and on and on. Your $125,000 of gross collected rents, so that's at the top, the income on your profit and loss report, is going to have all these expenses that maybe will total 50%. So at the end of the day, you might be left with $60,000, $65,000, $70,000 in net operating income. Now let's flash back to the Wendy's. Same thing, $125,000 gross collected rents. However, because this is what's called an absolute triple net lease, which I'll define in a moment, in this case, the tenant pays your taxes. The tenant pays your insurance. The tenant pays for any type of property management, any type of landscaping and parking lot repair and maintenance and snow shoveling and roof repair and structural repair, et cetera, et cetera, et cetera. So at the end of the day, the $125,000 is net to you, okay, the investor. So that's going to be the main difference between net lease and multifamily. Now, to kind of drill down a little bit further in net lease, I called this property, this Wendy's, an absolute triple net property. Now, pretty much all quick service restaurants or fast food locations are based on what's called a triple net lease or an absolute triple net lease. So what that means is that there's three different categories of net. So the first one is your taxes and insurance. Again, the tenant pays for those. The next one is going to be your common area maintenance, things like, your parking lot or if there's a lobby or things like that. And the third is going to be your roof, structure, and parking lot. So that's an absolute triple net lease. All expenses are paid by the landlord. Now, there is what's called a double net lease, which is exactly the same thing. However, the landlord is responsible for roof and structure, and in some cases, parking. Those are the main types of net lease deals that we have. Now, if you want to kind of go a little bit further along the spectrum, we have what's called a shopping center, right? Or a multi-tenant retail property. In that case, the landlord is going to pay for all expenses like management, like parking lot repair, like roof, like structure, like landscaping, snow shoveling and salting and lot sweeping and all that stuff. However, in many of the leases in a shopping center, we have what are called CAM charges, common area maintenance charges, or triple net charges, where the tenant is actually billed back their pro rata share of the expenses so that at the end of the day, the landlord is laying out the expenses throughout the year, but being reimbursed every month in the CAM charges or triple net charges that the tenant is paying. There's a few other types of leases, like ground leases and leaseholds we can talk about too. But in general, that's an overview of what triple net lease is or net lease is.
Revenue is vanity, profit margin is sanity, and cash is king. So Dan is saying, I want to see the net cash at the end of the month, and the triple net lease is doing that. Dan, what are the negatives or the cons of getting the triple net leases?
Good question. So I like to be an eyes wide open type of person. And anytime somebody's getting an investment, I tell them exactly the way that it is. So with single tenant net leases, so your Walgreens, your Rite Aids, your CVS's, your McDonald's, your dollar stores, your medical single tenant medical office buildings, the real risk is a lack of diversification, right? Your entire income stream is based on that one tenant. It's not based on 15 or 20 tenants in a shopping center, and it's not based on 10, 20, 30, 50, 100, 300, tenants in a multi-family building. So that is definitely a risk and a downside. However, the way that we mitigate that, Gino, is that one of the major factors on, analyzing and underwriting a net lease deal is we want to know the strength of the guarantor, right?
Mm-hmm.
The example is if Gino lends me money, right? And Gino doesn't have any money to his name or assets to his name, the guarantee that he's signing is pretty weak. If Gino's got a boat and a Bentley and a house and all this, all these assets, the guarantee is much stronger. Same thing in net lease. If I'm dealing with a one unit operator that has one Taco Bell, that's all he or she operates, and they sign their name on the lease and they've got $100,000 to their name, that guarantee is not very strong. But if I've got a guarantee from, Meritage, which is the largest Wendy's, franchisee that has, close to 400 locations, much stronger guarantee. Because keep in mind, if you have more than one unit on the guarantee, if that location is struggling, you're still going to get paid rent, okay? If they vacate that location, you're still going to get paid rent because your lease is guaranteed by the entire corporation. So one of the things we want to do to mitigate this risk of no diversification of income stream is to have as strong of a guarantee as possible.
Man, there's so many questions that pop up from that question for me. What happens if I own a Walgreens and you're seeing they're closing all over in California and all? Are they personally guaranteeing it? And then what happens is they vacate, they're still paying rent on that spot?
Yeah, great question. So it depends on the guarantee. So not all Walgreens are created equal, and this is true across the board in the pharmacy space. Sometimes, you look at a lease and you think it's a Walgreens, but it's guaranteed by, I'm just making this up, but, Walgreens of Southeastern Michigan that has 13 locations. So in devil's advocate, if Walgreens really wanted to, they could bankrupt that entity and not suffer major consequences with the larger corporation, and the landlords would be out. But in most cases, when you see these dark, vacant Walgreens, which, by the way, you're going to be seeing more and more of them, in most cases, Walgreens, believe it or not, it's either they're at the end of the lease, or if they're not at the end of the lease, they vacate and they're still paying rent. They'll often try to work out a buyout with the owner to say, hey, I owe you $750,000 over the next 3 years. Let me give you a 525. And the owner says, okay, well, I've got a developer that wants to repurpose this. It's a good deal for me. Let's do it. But in the pharmacy space specifically, Gino, you've got a lot of downsizing. You've got downsizing of footprint of the store, as well as a downsizing of the rent. One of the oddities of the pharmacy within the net lease space is that typically they're amongst the highest rent payers. And as a landlord, you don't necessarily want that, right? Because if you're renting at way above market rent and they do vacate, you can never replace that. So Walgreens knows that, and they've built what's called the Cooper concept. So whereas the standard Walgreens is about 13,000 to 15,000 square feet, they built a concept that's roughly 2,500 square feet, give or take a few hundred square feet. And what they're doing is they're vacating those main incredible corners, and then they're going 400 feet away, opening a Cooper concept with more of an emphasis on the pharmacy, the drive-through, and the top 100 or 200 producing products in the store. It's pretty interesting what's going on.
I want you to promote your education on this, because my next question is, we could talk for hours about this, but where can listeners get more information on your stuff? Because there's a lot of due diligence to be involved, because not all multifamilies are created equal. Not all triple nets are created equal.
You're taking in terms of where can people get more information about me or to contact me?
About you, exactly. Yeah, right now. I don't want them to wait to the very end, because if anyone's thinking about this and jumping into it, I think they should get the information before waiting till the end of the show.
Yeah, appreciate that. So first of all, I'm very active on LinkedIn. I put out content daily. So you can check me out there. Dan is my first name. Last name is Lewkowicz, Lewkowicz. Again, Lewkowicz. Reach out, connect with me, tell me that, you were listening to me on the Jake and Gino show. Another way is, if you want to know what your property's worth, or you want to, sell your property, or you want to talk real estate, you want to get into brokerage, get into investing, you need some help, you need somebody to listen. I always love talking shop. So I'll give out my personal cell phone number. It's 248-943-2838. Again, 248-943-2838. And, if there's anything I can do to add value, I love what I do and I love helping people. So it would be my pleasure to connect.
It's interesting because a lot of brokers won't give their numbers out because it's a little behind the curtain. Like I told you, how many brokers come on podcasts? Not
Sure.
many. How many give? It's trying to be different in this part of the market cycle.
Yeah.
Investor profile. What kind of investors should be investing in triple nets?
What kind should be? I mean, really, it's. I would say anyone. I will tell you that if you're looking for singular ownership of triple net property, there's not a lot, especially in the single tenant space, below $1 million. So you're going to need a good $300,000 for a down payment. Shopping centers, you can find them 500,000 or $1 million. So similar, you might need 150 to 300 grand. So there is going to be a little bit of a barrier to entry for some people, right? Not for everybody. There are people who are very unaware of it, but there are net lease syndications. I have clients that have funds. I have friends that have funds that will take 25, 50, $100,000 and invest in net lease properties. I myself, through my self-directed IRA, am investing in a joint venture loan on a Starbucks build to suit that's going really well. So there's all kinds of opportunities. So the investor profile really, it varies. Most of the people I work with are anywhere from what I call a mom and pop who owns 1, 2, 3, 4 net lease deals to a fund manager who's very sophisticated, raising capital, finding deals, doing deals, to real estate investment trusts that have are publicly traded and worth hundreds or worth, I don't know, 50 or 100 billion dollars. So it's all across the board.
When you're looking at your space right now, where do you see the risk going forward?
I mean, again, it pains me to say this because I know that pharmacies have been the darling of the net lease space for so long, but I think there's a lot of pain that's going on, that's happening, in the pharmacy space, and it has to. Many things in nature work, through some type of way of evolving and changing and getting better and modifying. And the pharmacy space was too big and too much money. That's just the bottom line. So that's really changing, and it's going to be very painful. It is very painful for a lot of my clients, and I feel for them. I try to help them. I think that all across the board, the small format is the new format, whether it's with pharmacies, as we discussed, even in fast food. I mean, you're seeing a huge problem in the fast food market is a labor shortage, right? And what's incredible is, as much as people are against some aspects of it, artificial intelligence and automation are helping to solve those problems, because ultimately they're making it cheaper for the operator to conduct his or her business. And we have to understand that the operator in there, the franchisee, is operating a business on a margin. Like you had said, they're trying to make money, right? So I think we're seeing a downsizing there. We're seeing more automation, more kiosks, more technology involved. I went to my favorite bagel store today to get some bagels for my family. I didn't want to wait there. So what did I do? I pulled up their app. I ordered my bagels. I pulled in. I told them I'm here. They brought my bagels out to the car. Right? It makes sense. It's working and it's being adopted because it makes sense and it helps people. So we're going to see changes there. I think that we're seeing a massive influx of capital into shopping centers specifically because, something we haven't touched on is over the last 18 or 20 months, as everyone knows who's paying attention, interest rates have gone up 550 basis points in terms of the federal funds rate, I should say. So what that did was it made it more difficult to use leverage on these lower cap rate or lower return single tenant deals.
Yes.
But the shopping centers that were trading at 7.5, 8, 8.5, 9, 10, 11 caps, that became more attractive. So I think we're seeing more and more people move into that space. And I love shopping centers. I saw a lot of them. So it's dynamic, it's moving, it's changing. And I really personally believe that 2024 is going to be an incredible year for us because I think that we're going to see, some compression in interest rates that are, long overdue, in my humble opinion.
Let me ask you, as far as shopping centers in certain markets or other opportunities you see, because down here in Florida, their shopping centers really didn't go vacant during the COVID time because business was open. Are you afraid of any certain areas in the country? And my backup question to that, the next question to that would be, are you afraid that the internet's going to hurt this long term as far as these big boxes shrinking, or do you think that's just a fad?
Yeah, I'm really not. And for some reason, there's this war on retail in the media.
Yeah.
Retail is dead, retail is dying, retail apocalypse. These stores are closing. Those stores. We saw this year massive number of bankruptcies. Rite Aid, huge bankruptcy. Party City, Bed Bath and Beyond. Right? Guess what? If you look at the number of stores that were open in America and the number of stores that were closed, we're net positive this year, despite the fact that all we can hear about is all of these major closures. And you know what? Another thing is people don't talk about is let's talk about retail vacancy rates. Okay. Talk about the health of the retail market. Retail vacancy rates are at an 18-year historic low, 4.8% nationwide. Okay, that's A plus markets and D minus markets, everything. That's incredible to me. I think that as a society we consume. We've been conditioned to consume. Retail is essential. Much of it. And much of it is perceived to be essential, even if it's not, right? So, if you look at especially neighborhood retail centers, they're convenient. You can get everything you need in one space. People still do it. As far as e-commerce, I mean, back in 2019, 2020, 2021, people were talking about how e-commerce was going to destroy retail sales. And yeah, e-commerce has definitely been growing, but it's a minority share of the retail market. And another thing people don't talk about is that the cost for the retailer to do retail on the internet is significantly higher than it is in person for a variety of reasons. One of them is cost per click or cost per customer acquisition, as well as your marketing costs, like I mentioned, and then the cost to ship. And then what about returns? I mean, if you ship a product out to a consumer, they return it. You don't make anything on the sale. You have to eat shipping both ways. That's why a lot of these retailers are so into this buy online, pick up in store thing. But I don't think that retail is going to die. I don't think that we're meant to sit behind our computer screens 24 hours a day and not interact with humans and not go to the store and not go to the mall. I'm bullish on retail. I think that there's a tremendous amount of opportunity, and I think that the rest is just media noise.
Let's take a quick time out to hear from our sponsors.
Now, we have had a great run in multifamily, going from 0 units to over 250 million in assets. That's over 2,000 apartment deals that we've been able to purchase through our framework: buy right, manage right, and finance right.
Now, Jake and I, we created the Jake and Gino community back in 2015. We launched our first book, Build Our Profits. And since then, our students have closed over 60,000 units. That's over $4 billion in assets they've been able to close over the last 6 years.
And that's why this community has been so successful. We call it results-based education, and we pour back into the community everything that we've learned on our journey from 0 to 2,000 units and all our systems and scale that we use on our very own property management and investing companies.
Jake, I love that. It's not just education, it's implementation. So what I want you to do, click on that link down below, apply to work with our team, see how we can help you on your journey in multifamily.
Now, Dan, it's interesting that you say that 18-year low. I would not have known that, and I don't consume news at all. What makes you think, or what's your opinion on why are they suppressing that? Because that's something that's truly important, because you would think the sky is falling. You would think retail is dead. I've heard office being dead for the last 2 or 3 years. I don't know if that's coming to fruition. What are your thoughts on that?
It's really hard to wrap my mind around, honestly, Gino. I think that it's sensational. If someone tells you retail is dead, you're like, oh, what? Let me click on that and see what that means, right? I think it's nothing more than sensationalism, because is retail dead when the vacancy rates are at an 18-year low? No, absolutely. It's alive and well. It's thriving. And that's part of what I do on social media is I tell the story the way that it is. I've said this over and over today, but I want to put out the true narrative and let people make their decision on what they think is true, because it's important. I mean, I would hate for an investor to say, oh, retail's dead, I'm not investing in retail, when they could have a tremendous experience, right? I want them to have that experience.
How are you able to scale the business? How are you able to go from doing single families and doing the fixes and flips to what you're doing now?
So with the single family fix and flips, it was very difficult to scale. When I was doing one at a time and working at Amazon as a business development executive, that was one thing. I could manage one. And I never had general contractors, at least up until very recently. I always managed it myself. But when I started trying to scale there and doing 4 or 5 at a time, I had to buy trucks and buy equipment and train people. And, it didn't have enough labor. I was hiring people from the neighborhood. People were stealing from me. It was very difficult to scale. When I got into brokerage, I got in as an individual, and I learned the business. And thankfully, it's a simple business. It's not hard, but it takes work. Okay. I love the brokerage business. That's why I created a training course about brokerage. And that's why I love training new brokers and helping people get in. It was life-changing for me, Gino, to become a broker. But once I learned the business, that's when I started hiring an admin. That's when I started outsourcing a lot of my databasing. That's when I started hiring junior brokers. I started leveraging, by doing multiple ways of outreach. So I was making videos. I was doing my social media. I was sending, hard mail, which no one does. I was making my cold calls, which you got to make, sending out cold emails. I had an intern, that was helping with all this stuff. So, that's really how I've scaled. And I'm at a place now where I've hit a very good clip of, volume. I'm top producer here in my firm. And, I'm just in the process of hiring another junior broker to kind of scale it and take it to the next level. And for me personally, especially with the junior brokers, it's more about education and giving back, just because I love that so much. I mean, I can't, we didn't know each other years ago before I became a broker, but, it changed my life. It changed my family's life. It changed everything. And I'm so thankful for that. So I feel it's my duty to be that guy to help others make that leap so that, they can change their life. And then, I mean, I get the incredible gift of looking back years later and hearing them just say, Dan, it's exactly like I'm saying to you, Gino, Dan, I'm so happy I did this. I'm so happy I put in the work. I'm so happy I followed these steps because my life has changed. So for me, that's where I'm at. And, I think next steps are going to be to scale up my team and, build something that's bigger, that has a broader reach, that's doing higher volume. And I'm excited for it for sure.
If a pizza guy and a drug rep can get into multifamily, what Dan is saying is it takes work. It's a lot of work. It's hard. A lot of work on the front end. There's a lot of commitment. There's a lot of patience. There's a lot of persistence. There's a lot of getting no's, but getting crystal clear and having that no shiny object and not get their itis. What are some of the mistakes that you see? Because this could be really important for people that may want to aspire to get into the brokerage. What are some of the mistakes you see beginning brokers make?
Good question. I mean, you hit on a major one for me, which is shiny object syndrome. My entire life, I suffered from shiny object syndrome. And when I first got into the brokerage world, there was an individual who came to our firm to do some coaching. And like within 30 seconds of meeting me, he's like, yeah, your biggest challenge is going to be shiny object syndrome. And I was like, is it that obvious? And I said to myself, I said, you know what? I remember I thought to myself, I was like, I went around when I first started every broker in my office and just interviewed them to ask them what worked for them, every single person. And then I made a list of like, it's in a box over here in the corner of my office, but of the 5 or 6 things that were like, if you don't forget these, you'll be successful. Right. And I put it on my desk right next to my computer screen. So it was always in my field of vision. And one of the things that I put on there was to become an expert in one narrow focus. Right. I didn't want to be a multifamily expert and an affordable housing expert and an office expert and a retail. I wanted to be a net lease expert. I wanted somebody, if they're calling about net lease, I'm the guy. If they're calling about something else, I'll refer them elsewhere. So I think it's so important to focus on one thing. I've seen a lot of people try to get into brokerage and do something else part-time. I have never seen that work. Not a single time. Never, ever seen that work. So I'd recommend focusing on that one narrow focus, carve out your time, your day, your energy, your mentality, your headspace to focus on that one thing and don't get distracted, by other things. And then the other thing is like, it's a business where, again, I'm so bullish on it. I love it so much. And I want people to get into it, even though I'm encouraging people to be my competition because I don't care. You know what I mean? But yes. my point is that, when you get into it, you have to understand that it could be 6 months, it could be 8 months, it could be a year until you really get your cadence, until your feet are underneath you. And you have to be okay with that. For me, I had 4 kids at the time. I had no choice. I had to succeed, Gino. I had to. I don't think I'd recommend that to most people, but for me, it was great because it was like, there's no option. It's only success. I have to. Like, people are counting on me. But I'd recommend that people get into it, that they understand that they need to be ready to work and grind and do what they're supposed to do and not get any recognition or, more importantly, a paycheck, until 6, 8, 10, 12 months in the business. And the last thing I'll say is that in some senses, it's a thankless business in some senses. So I always look at it like, if you're looking for, appreciation and gratitude and all those things, you're going to get it from some clients, but your paycheck is the gratitude. Your paycheck is the appreciation. And I think that that's important because it's a transient business. You do a deal, it's gone. I can tell you about 10 deals I did this year, but they're all gone. They're in the past, right? So I think it's really important to focus on what are you looking for? What are your metrics for success, so that you can keep yourself fueled to move forward.
What's amazing is that business transcends and goes from one area to the next, because if you want to become a multifamily investor or a self-storage investor, you just go listen to what Dan just said 3 minutes ago and replay it, and it's the same thing. Multifamily, focus, select one market, become an expert in that market, understand who all the brokers are, and like Jake and myself, it took us 18 months find their first deal, 3 months after for the second deal, but the skills are really there. Last question before I let you go. What are some of the skills that a broker does need? And once you're on there, there's some skills that you guys really need to excel at. The patience and the persistence to me is a skill because that's more of like a discipline. But what else do you think they should really try to focus on?
I mean, there's no doubt that hustle's number one, right? Are you gonna keep calling and keep doing what you're supposed to do? I'll give you a quick example. I secured a listing yesterday of a shopping center here in Michigan. And the guy said to me, he says, listen, I was talking to my partners and I said, we don't have a choice. We have to give the listing to this Dan guy because he's been calling me every single month since November of 2019.
And you know what? Time out. I'm going to cut you off again. You know what day it is, everybody? We're going right before Christmas. Most brokers are off. They've taken the last 2 weeks off. Dan is out there hustling for a listing. That's what he's going to do for you. That's what happens if you work with Dan. He's not going to take off because he kills whatever he eats, right? Whatever you're hunting, that's what you're going to eat. That's the mentality you need to have. And to get a listing 3 days before a major holiday, not many brokers are doing that because they're taking the time off. But he understands he's been working with his client for years, and now the opportunity presents itself, and he can't say to himself, oh, well, it's the holidays, I'm going to take off. No, he's got 5 kids. He needs to feed his 5 kids, and he knows what he needs to do.
Exactly. And the point is, I was on the phone with him. I pulled up the CRM, and lo and behold, November 2019 was the first time I talked to him. And this guy blew me off so many times. He didn't return my call for months. And there were 7 or 8 or 10 times where I said, you know what, I'm wasting my time. But I knew that I wasn't. So that persistence beats resistance every single time. That's huge. The hustle, that grit, that gumption, the ability to keep going, that's so important. And the ability not to overthink and just follow the blueprint. Commercial real estate brokerage is a blueprint that I'd gladly help anybody get through. I am hiring personally right now, so I would love to help you and also work with you. But, the point is that if you follow that blueprint and you don't get too creative, I mean, it's okay to be creative, but you don't have to reinvent the wheel, you will succeed. So that's huge. I think that, knowing who your, knowing where your allegiance lies is so important. People always ask me, they say, Dan, do you invest in your own deals? And I say, I don't invest in my own deals. I invest in commercial real estate deals. I think I just alluded to one, right? Personal deals. But I want to make sure that 100% of the time my brokerage hat is on, right? I want to make sure that a client doesn't come to me and trust me with their multi-million-dollar asset, say, Dan, get us top dollar. And I say, okay, cool. Let me, I'll buy it, I don't want to do that. I want to do what's best for them. So for me, that's really important. Not every broker, functions that way. I think it's essential. I don't think there's any way that I can do my job and do what's best for my client if I'm also at the same time diametrically opposed to what's best for my investment. It just doesn't make sense. So that to me, is definitely huge and important. And then I would just say, you got to surround yourself by good people who will be there to support you and help you and train you, because there's always going to be something that you don't know. But if you're working with good people, there's always going to be people that can help you in finding out what it is you don't know.
Dan, where can the listeners get a hold of you? Once again, because I want them to get that cell number and the website again.
Yeah. So first of all, I'm on LinkedIn, put out a lot of content there. Please follow me, reach out, send me a DM, tell me how we met. First name Dan, last name Lewkowicz, Lewkowicz. Again, Lewkowicz. My cell phone number, 248-943-2838. Again, 248-943-2838. Please reach out. I'm here to help. I'm here to be a resource. I love this, and I love talking to other people who love this or want to get involved. So please, I would love to make your acquaintance soon.
Dan, to me, the theme of the podcast is proper preparation prevents poor performance. The opportunity that Dan got this week, it's been 5 years in the making. He was properly prepared. He was in his CRM. He got back and did the notes. He reached out a dozen times, probably more. You don't get it on the first touch point, but being properly prepared, focusing on the specific niche, learning that niche, understanding it. Then obviously you learn, you do, and you teach. He's creating the course to monetize, but what he doesn't understand is he's creating that course to really learn it himself. And that's what's really important about real estate. And I think real estate's ever evolving as far as market cycles goes. But the basic tenets of real estate for us is buy right, manage right, finance right. For you in the triple net space, you could probably use that framework as well. But understanding that and really getting out there, networking. And last, all the brokers out there, all the investors out there, don't be afraid of using social media. Get onto social media, start utilizing it. If you really want the golden nugget, to be honest with you. Go on Dan's profile and go on Jake and Gino Barbaro's profile. See what ours are on LinkedIn. Rip off and duplicate. Create one very similar to that, and you have the framework there. Start with one. If you like LinkedIn, start with LinkedIn. If you like Instagram, start with Instagram. The idea is just to start, and it's okay to start with one. Any final words, Dan?
Just thank you. I mean, I've followed you guys for a long time, and I really respect what you guys are doing, and I love it. And it's just I love meeting people who are making an impact on the world and on other people. And I've met people. I've been at speaking engagements, and people have, at the end of the day, stood up and say, "Oh yeah, I'm in Jake and Gino's mastermind." I'm like, "Oh, that's awesome."
I love that.
Yeah, so it's great. Just keep on doing what you're doing. God bless. That's really amazing. And just to everyone out there, like, I think we've said this in many different ways today, is whatever you need to do, go out and do it. The only thing that's stopping you from succeeding is you. And if you go out and make those steps and network with people like us, the chances of success are absolutely incredible. It's out there. It's within your reach.
Thanks, Dan. I want to thank him for being an amazing guest on the Jake and Gino Show. And until next time, let's go out there and let's make it a make it happen day, everyone. Take care.